Hello everybody, this is Gabriel. This is the TrendScan for the month of March. Well, this is a very special month because we've got this corona crisis in the world going on. And we clearly see this here on, let's look here at the gold chart and the other metals. I think it shows best the impact on the market. So here on the daily chart, we clearly see how gold sold off, touched the 200 moving average, and then there was an immediate reaction towards that. Well, this reaction clearly we can still see the high volatility on the weekly and on the monthly. Well, this is the month of March, right? So we see a big bar, but we have got top wicks and bottom wicks. And basically what we see here on this higher time frame, the monthly chart, is the price came just back and tested the 8 moving average. So it's still in a very bullish tone here. And as you might remember, well, we had an S2 entry here, and we've got an S2 pattern long, and it triggered really nicely so far. And there's no impact at all here on the quarterly chart. So we didn't even touch the 8 moving average. So overall, like on the looking here on the gold chart, we see the scare, but we can see as well where it found support. So it found support not only on the 200 moving average of the daily chart, but as well here on this base level. That's an S1 pattern that really nicely went off. So there's a retest of the base, which is not uncommon. So this is still in bullish territory. So let's have a look at silver, where we can see much better this scare going on. So silver here on the daily chart has seen a much stronger sell-off. Like it went from $19 down to below 12. Well, that's a very heavy sell-off. But just remember that well, silver was in a vulnerable position already. It didn't show the strength as gold did. We're still here in this consolidation phase, and this pullback. Well, we see it has broken this support area, which is an important area, and we need to see whether that holds or not. Well, currently it still holds. And it found support here on the 200 moving average on the quarterly chart. So this looks pretty vulnerable, but it could still be a test bar developing here. The test bar is a very important a single bar event analyzing the futures charts. And this could be a test bar. It could be the beginning of a series of test bars, which is actually bullish. Now let's look here at palladium. Well, palladium was a great chart to trade along, like all the way. That was an exhaustion move. So it's always interesting to see how these charts that have been in overextension mode, like over exhausted, how they react to a situation like this. So on the daily chart, we see the big down move, the big scare, and the partial recovery. But looking here at the monthly chart and the weekly chart, well, this still goes for a test of the 21 moving average. As well here on the monthly, we see a big spike, but that's another test of the 21, and there's a test of the 8 moving average. So nothing tells me here on the higher time frame that this uptrend is actually broken, especially seeing this immediate rejection from the lows. So this is the copper chart. I really like to look at copper to see the impact on the economy if there's a depression or recession around the corner. We could actually see last month, like here in March, copper prices reacted, and we saw a sell-off too. But this sell-off didn't break the prior support level here from the year 2016. The level was tested and found initial support, and as well we find here support on the 200 moving average. So this is kind of, we are in an early stage. The market doesn't know what the impact will be. Well, obviously that depends on how long companies and shops will be closed, but I only can see that there is a more severe impact on economy once we actually have a monthly bar that crosses this line and closes below this line. Now let's have a look here at the US equity market. So here, for example, the standard, the S&P. Well, that's a brutal sell-off, right? You can clearly see it on the weekly. It's a brutal sell-off, and we never had a sell-off that rapidly and that steep in that short of a time. And it looks pretty bad on the weekly chart. However, if we're looking at the monthly, and that's what we're doing here, right? The monthly and the quarterly, well, especially the quarterly, well, this is a test of the 21 moving average, and we can already see that this quarterly is finding some support here. Well, we should put things always into perspective. And this was a runaway market for 8 years, right? That's a very strong market. That's in super trend mode, and that's a runaway market. And even here, like at the top at 3,400 level, we've been overextended from the moving averages. So this is a brutal decline, but this decline comes out of an overstretch to the upside, which is why, like, looking back, well, at current levels here, current level of 2,480, well, that's the level we had like end of last year. So we're basically at levels from a year ago. So yeah, that's a brutal decline, but we had a very strong increase as well. So overall, it looks doesn't look good on the monthly chart or on the weekly. The bulls are very strong. What we just have recently seen here on the weekly chart the last couple of weeks, that the bulls are actually stepping in. So stepping in the moment that the last dominant weekly low was tested. And let's just bring that up for a minute. So this dominant low, like, it's dominant because it's very sharp and we've got a wick. So that dominant low was tested and there was a rejection. So price finds support. There were confident bulls that were stepping in at that point. Well, I don't know about the 200 moving average. To me, it looks like it's broken. It doesn't go through as a test. So really have to see now what's going to happen during this next weeks. I would think that the bears are so strong here that the bulls are quite discouraged, and that I see a strong probability that we see a second leg down. So a second leg down could bring us even to this the levels of 2016. Like around 2,000, 1,800, but that should then offer support. On the other hand, if we make new highs here above the last weekly highs, well, this should be a bullish signal, because this green line, that's a base for system 1 to trigger. It's not a high quality system 1 gecko, because we see this big up move. So there's only one stop run level and it's pretty high, but still it's a gecko pattern. If we see new highs, and then we can see as well a rebreak of the 200 moving average, well, that's a bullish signal. I wouldn't want to trade this on a weekly chart, but I would like to go to lower time frames, like a 5-minute, 15 on hourly, and trade a potential momentum move upwards. Well, how could that happen? Well, just imagine if there's a remedy or cure found within the next couple of weeks. Well, we could see a V-shaped recovery pretty quickly. Anyway, the market is scared, and we might actually see a more pronounced consolidation pattern here that spans over maybe 1, 2, or even 3 years, with this developing into a broader consolidation pattern, such as an S2, for example, on the monthly chart. We'll have to see how that develops. Let's have a look here now at energies, crude oil. You might remember me saying that that's a very bearish chart, and that we're going to see new lows. Well, it's hardly to believe with oil prices that low, but that's what we have actually seen. We've seen a very strong down bar, like this red bar is the month of March. But overall, if we look at the chart, it's not something that is like very astonishing, right? If you wouldn't know about the Corona crisis, that's still a normal move, because what is that? Well, that's a stop run move below these lows. Okay, quick look here at natural gas. And natural gas, here we can see the volatility coming up here, but it still follows a nice EMA trend down, and that allowed actually here for 3 gecko patterns in a row. So whenever there's crisis, there's opportunity too. Let's have a final look now here at the US dollar index. we can see well similar. We see a bar with a top and bottom wicks. You can see it as well here on the weekly. So there's a lot of loss in confidence here in the world. People are moving in and out of the US dollar. And we can see it. We can see it here. Well, this allowed for good trading opportunities. This green bar actually, and well, basically what happens here is that US dollar index is battling with the 100 index points. This is a big stop and an important crossing area. If we actually cross this area, and that would be the case once we go above 104, well, then there's free room to go well to the next high, which is about 122. So this means a dollar evaluation, and that would actually not be that good for emerging countries, because they have debt on dollar basis, and a strong dollar would actually put much more weight on their economies. So once this corona goes more into the background, we might actually see economic difficulties surfacing, and this might even start from emerging markets coming from a strong dollar. So I'm very bullish here, the dollar and the US dollar index, and we might see the momentum develop here on the monthly chart. When this wick high gets broken, and as you can see, this wick high is the overall high here as well, and the next high then is quite far away. So we're in a vacuum, and this level up here then becomes the next magnet. So let's see how things are developing. Thank you.